Hello guys, today I'm going to be covering the theory aspect behind a manufacturing business. So first we're going to look at what a manufacturing business actually is, and this is a business that produces goods by converting raw materials into finished products. An example of this would be clothing factories and furniture manufacturers. And this differs from the previous businesses you've been exposed to, which was a trading business which buys and sells finished goods. However, manufacturing business is the business that produces the finished goods and then sells them to suppliers. So we're going to look at the elements that make up the costs associated in these manufacturing businesses. First, you have the direct materials, and these are like the raw materials that are used to physically make the product. These would be like wood for furniture or fabric for clothes. Another aspect of this would be the direct labor associated with it, which is the workers that work to make the product, the finished product. An example of this would be a carpenter or machine operator or even an assembly line worker in a conveyor belt system. Another associated cost would be factory overheads, which are the indirect costs. These are not directly traceable, but they are very necessary for the production of these products. Examples of this would be the factory's rent, electricity, supervisor salaries, and depreciation on machinery. These are only relatable to the factory's costs, though. It must not be confused with the selling department or admin department's costs. As I've just mentioned, the admin costs would be kept separate from the factory's costs, as well as the selling and distribution costs. Selling and distribution costs are the costs to get your product to your clients, and admin costs are the day-to-day runnings for the manufacturing product. And those are all the very necessary concepts you need to know when starting with a manufacturing business. And I wish you luck, as my partner will now begin to do some practical examples and work with you.
Hello guys. Okay, so like my partner previously stated, all of the very crucial information and theory you need to know in order to do manufacturing, I'm going to be doing a practical example with you. So two things he did not say is, for you to be able to do manufacturing, you need to be able to do the PCS, which is the production cost statement, which you're going to use to calculate your total manufacturing costs. And then you also need to be able to do your break-even point to determine if your company is making a profit, a loss, or if they are barely making even. So first, let's say for a practical example, you have a factory named the Sweet Tree Chocolate Factory, and they produce obviously sweets and chocolates. So they're going to have direct materials, which are cocoa beans, sugar, and milk, which they need to buy in order to produce this chocolate, which you physically see in the product or the good being sold. You then have the direct labor, which is the physical workers who mix, melt, and shape the chocolate and therefore earn wages. You then have factory overhead, so that's everything that is indirectly used to produce this good, but you don't physically see it in the good. So that is like the electricity to use the machines, the salary of the supervisors in the management. There will also be the machine's loss of depreciation, as he said, and all of that would be calculated together as a factory overhead of the business. You would then put all of that into the production cost statement to get your direct materials used, which you would add with your direct labor. You also add your overheads to get your total manufacturing cost. All of these costs are extremely crucial as they are used to accurately calculate the true cost of production for a business. This is very important because you will later on use this to also calculate the break-even point of an entity. That is where you work out the amount of units they need to produce and sell, or to make a profit, a loss, or just to break even. When we do this, we use the formula of fixed costs divided by the selling price per unit minus the variable cost price per unit. So the difference between fixed and variable costs are fixed costs are costs that do not change depending on the amount of products or goods you produce, where variable costs vary depending on the amount that you produce. So the most important things that you need to remember are, you need to be able to separate your direct from your indirect materials. You need to be able to differentiate your overhead costs from the stuff that needs to go to your overheads, which are for the factory, and the other types of costs that need to go to your administration or your delivery costs. All of this it's not that hard, and they would usually give it to you in the format of a trial balance or administration. Sometimes they give the for electricity or even rent, they give it in proportions or percentages, and you just need to do calculations. But the most important thing is that you know how to separate everything and how to clearly indicate and add it to the certain aspects where it belongs. That is manufacturing as it's in its most simplistic form. The important thing is to study the theory, look at the calculations, and if you focus on all of the aspects we have provided, we are sure that you would be able to ace these questions and do very well in your exams. Good luck.